Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping back down into the world of Bitcoin, taking a look at the recent price action, what's going on, and what I think is likely to happen next. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community, talking crypto 24/7. It's completely free, and it is the first place that we go to notify you of everything that's going on in the crypto space. Keep a finger on the pulse of crypto by joining us down in Discord. Okay, let's get right into this one. Bitcoin, BTC paired up with USDT on the hourly chart, and Binance is the data source. Following on from yesterday's video where we're talking about this move to the upside, we're looking for a fourth wave move. We did actually hit that just up here. We actually entered into the fair value gap, or actually kind of got rejected on a double top with this little wick over here. I think we're going to have to come up into this range a little bit later down the line, a little bit more, because we haven't filled it. This is an imbalance with an institutional candle. Let me just turn all this off. This particular candle right up here, this one where we can see this volume really pushing us down, has left a gap behind. This gap here is something that will come back and get filled out. So we'll eventually end up coming up into that range, which currently sits at $22,084 to $22,464. So at some point we'll come up there. But with fourth wave actually just reached a little bit higher than the 38.2% retracement, which was spoken about yesterday at $22,044 right up here. You can see that that's now marking completion of that fourth wave. We're looking for the fifth wave, and the fifth wave comes down in this range here, 21,063 to 21,303. Now, it's possible that there's a couple of different things that are going on in here. One, we could be looking at a diagonal structure, and if we are looking at a diagonal structure, then it's going to take some time to play out, and we'll bounce up, we'll come down, we'll go back up, we'll come back down, and we'll end up with a five-wave structure that overlaps. So, like, for example, 1, 2, 3, 4, and 5, like that, and it'll just be a bad diagonal, but it'll be what it is. Alternatively, we are looking at a five-wave structure already, potentially. And what I mean by that is a 53535. More details can be found on 𝗕𝗘𝗪𝗏𝗀com if you haven't and are not familiar with Elliott Wave theory. Link for that is down in the description below. But we go 1, 2, 3, 4, and 5 here. Okay. We then come up, and it does look like we go into an irregular flatten here. So 1, 2, and 3, or A, B, and C. In an irregular flat, B wave goes past the fifth wave low point, or the origin of the A, and then the C wave goes up higher than the A wave there, so an irregular flat. And then, of course, this could be the start of our wave 3 situation. Now, if that is the case, we take our fifth wave low and we put our fibs on there. We move this up to our C wave high, which I'll go and expand in here because I want to make sure I get this on the correct level right in there, meaning that we should be aiming to come down in wave 3 around the $21,161, right? Now, our current structure for this looks like we might have only just done a 1. Got to come up here into a wave 2. We'll then come down in some kind of big wave 3, 4, and then 5, meaning that we're probably going to end up with an overextension under this particular scenario. Now, it is unusual to kind of see this do that, but it's one of those things where actually we've got a couple of different options, a couple of different takes on it. So instead of maybe thinking of this as a 5-wave structure, we might start to think about it as a double zigzag potentially, or even something more sinister. So there are lots of different options when it comes to those overextensions. So for now, I'm going to park it up and see how that kind of goes. I'm just going to say that our expectations are to come down into this lower range at, as I said, down here at the 21,063 to 21,303. But if we do start to see overextension, then we're going to go down deeper than that. But for the most part, that's kind of where the hourly chart sits right now, with the expectation of just basically moving down a little bit. Now, if that is the case, and we do a kind of if we do kind of come down here and do a 5-wave structure like this, then obviously we're going to see a bit of a climb before going back down and all that kind of stuff. We'll keep our minds open here, but essentially if I zoom out, it does look like this is going to be where we kind of complete out a C wave structure, because it is 335, and then we can move on up. And as I said before, that fair value gap, that's then fair play, becomes an area of interest to us, where we can start to think about maybe a 3-wave structure, like an A, B, and C structure, just taking us up, filling that fair value gap, and resolving the imbalance that had occurred there, okay, whilst also aligning ourselves to the structures that are here from an Elliott Wave theory point of view. Now, on the weekly time frame, we can see that we did get rejected from the 200 EMA about 2 weeks ago now, and you can see that this is really getting cemented in with the negative price action on the weekly closes. We can see that this 200 EMA was also resistance up here back in August of 2022. So again, we just get confirmation that the 200 EMA is really hitting Bitcoin down and taking Bitcoin to those lows. Now we can see that we are still really high and overbought on our weekly stochastic RSI. So we are still looking for progression downwards. And what we've seen so far is actually really minor on this weekly time frame. Okay, we've currently moved down just 11%, and we haven't really moved too much on the stochastic RSI at this point in time. I understand that it's going to take some time. We're going to work our way down. We're probably going to have to revisit this previous area of demand down here at 17,607 to 18,814. This is the most likely scenario. There's a little bit of resistance and support on that journey to the downside anyway, so don't expect it to go straight lines, bounce around a little bit and all that kind of stuff. There's a lot of different things that are going on in the real world as well, outside of just charts and price action. We can see the US basically going after crypto. They're attacking various different exchanges. We also see that Paxos is being sued over potential that BUSD as a security, and basically it's just an attack on Binance, and so there's a lot of other things going on. Then of course we've got everything going on with the US and China, then of course the US and Russia, and various different things. It's not looking great on the kind of bigger macroeconomic landscape as a whole. So we can't be too positive thinking that we're going to the moon when we don't see the right action or price action and things like that. And also, the on-chain data, it doesn't really show us that there's a lot of participants outside of just retail, right? We can see that the retail wallets here are all pumping up quite massively, but we don't really see the same thing when it comes to the larger institutional players, right? And the big money. So big money, institutional money, smart money, essentially, is what kind of moves the market. And we are not really seeing that. What we're actually seeing is just small money, dumb money, retail money, essentially, coming in here and just FOMO, and that generally ends badly. So we want to be aware that, on our on-chain metrics, from the wallet count side of things, the inflows, the outflows, everything balancing out, we're actually in a really neutral position. We're not seeing a big, massive bullish movements, and we're not seeing big, massive bearish movements. We're actually very, very flat. And this means that it's a calmer before the storm. And we know it can potentially go either way on the kind of shorter time frames. But the bigger macro time frames are telling us that we want to be a little bit cautious here, because it looks like we have to go down further. And when big institutional players were selling down in November, that doesn't give me confidence in thinking that the November lows are in fact the actual bear market bottoms, because that doesn't make sense that big money is coming out during this move to the upside, yet only small money is going in. Instead, I think that the lows are likely to occur when the small money is coming out and big money is going in, and we haven't seen that yet. So potentially new lower lows on the horizon, specifically with everything going on with the US, SEC, and all the attacks on crypto from that side, and everything Russia and China, and basically we're seeing increased record highs in credit card debt, while saving accounts are depleting down massively. Inflation rates are running rampant, and I think the US have really kind of ballsed up from the Fed's point of view on inflation, and I think we're going to see some interesting times ahead when it comes to all that kind of stuff. Now, from a Wyckoff accumulation pattern, the only one that I can see on here at the moment is this. We cannot be past phase B, as there's nowhere on this daily chart that allows us to look at this and say that we are past phase B. There's no spring event. I've been through this a dozen times already, but I'll go through it again just to kind of re-concrete everything in, right? We can see up here, let me get my pencil. Okay, this area would be RPS, okay? We come down into our selling climax, that's down here. We have an automatic rally up here, okay? We pull back down into a secondary test, and then we come up into these highs up here, which will be our resistance lines. We then come down, okay? We find brief support around this area, but then we come down into a phase, or the secondary test in phase B. We then come up, right up here, which is where we are right now. This is basically above the automatic rally, but not above the resistance top level. And then of course we have a spring event potentially down here to occur, but there are two schematics, okay? And basically there's no guarantee that any of those are going to play out. One of these is going to play out, essentially. Doesn't mean you have to have a spring. You can of course have one without, and it all depends on where the money is. So let me go ahead and just remove all my circles there. Okay, so essentially it means that we either are following a Wyckoff accumulation pattern, or we're not following a Wyckoff accumulation pattern. And if we go up higher than 25,211, right? This isn't kind of the thing that gets invalidated as such, because, it's kind of a manipulation pattern, which basically means institutions are either making this pattern happen or they are not involved at all, and it's just a coincidence that it looks like this particular structure. So I don't want to use the word invalidation because I don't think that's really technically true. I mean, we use invalidation for things like Elliott-Wave theory because it was following a particular pattern, and it's usually driven from the herd, and the herd can deviate away for whatever fundamental reason, and then you kind of get an invalidation of what they were doing. In the Wyckoff pattern, it's either they are doing it or they're not doing it. And so I don't think invalidation is a good term for this one, but I would just say it's more like it is or it isn't. It's true or it's false. We are either following accumulation or we're not following accumulation. Now, there's a couple of different variations that we could find ourselves in when it comes to the Wyckoff accumulation pattern. This one that I've drawn here, okay, and then there is one where actually we're yet to actually have the secondary test in phase B, meaning that all we've done at the moment is push up higher, okay, than our automatic rally, essentially. So it's kind of one of those. We don't necessarily know exactly where we are on the scale. And there's only two real variables here, or two different variations of the pattern that I can see. This one here is the earliest I can see it forming in the chart, right? All of this stuff up this side, none of this, all of this, in fact, all of this area here doesn't marry up with anything from the Wyckoff accumulation pattern. Okay, so the only place that we start to even remotely start to follow anything is when we get down into those June lows, right? There's nothing else here that would allow us to kind of say we've had an automatic rally, we've had a find resistance, then we come down into a secondary test, because this is how a lot of people are saying it, right? They're kind of thinking that we have ourselves the PS up here, the preliminary selling, then we kind of come down and we have our selling climax, we have an automatic rally, then we have our secondary test, then we have our resistances, and then look, we're down here in our phase B, and then we're apparently going up here. This is the move upwards before we have the spring event, right? Now, if we take a look at the schematic, where we can quite easily see, doesn't really take too much to know that this area of the chart, right, this little spike up here has to go above the automatic rally, and if the automatic rally was up there, well, then we simply cannot possibly be following a Wyckoff accumulation pattern, meaning that there has been no spring event. Nothing that has occurred. So we know that the earliest place that this is possibly even remotely possible for a Wyckoff accumulation pattern is to start down here in the June lows, where we have an automatic rally, a secondary test, a push up into the resistances, back down into a phase B, then above the automatic rally, but not above the resistances, then back down to retest the secondary test of phase A, which puts us at 18,626, which also happens to be also this area here of previous demand when we take a look at it from a smart money concepts point of view. So we start saying 17,600 to 18,800, and all of a sudden you start to think, okay, well, it's more than likely, if we've kind of got a potential Wyckoff accumulation pattern, and we also have this previous area of demand, that the price is going to want to gravitate towards that liquidity, right? So therefore, the likelihood and the most probable scenario is that we're going to have to revisit the $18,000 levels. Now, it is possible, of course, that we don't come all the way down here, but I think there's a high likelihood that we do. And considering our stochastic RSI on our weekly chart is reasonably high, the expectation here is that actually, yeah, we're going to find ourselves bouncing around a little bit potentially, but we're more than likely going to revisit the $18,000 level. Now, it's possible, of course, that we lose this. And if we do lose the $18,000 level, then there isn't really terribly too much more to talk about until we come down towards our 11,600 and 13,900, which would then obviously fall in line more with the spring event because it would be a new lower low. So we've got to consider that there's a lot of very different things going on. There's lots of different ways to look at the market, lots of different ways to market or to structure out the market in various different kind of angles. But a lot of it is kind of conforming together and telling us, like Elliott-Wave theory, saying, okay, we get potential move down to kind of like 19,000, potentially even a little bit further. We then have, good levels of demand to be found around the $17,000 levels. And then we've got a Wyckoff accumulation pattern saying there's a secondary test or a test of that secondary test of phase A, 18,800 as a likely kind of scenario as well. So we're starting to get lots of confirmations that the price action's got to kind of come down. Not only have we moved up quite a bit, but, we've got a lot of different ways of kind of analyzing the market and the structure of the market, and a lot of it says 18,000 is a nice area to be kind of testing out. And obviously how the price reacts in that area, it could determine whether or not we have a new lower low or not, right? There's a couple of Wyckoff patterns. There's one that does and one that doesn't, and all that kind of wonderful stuff. So at the moment, sit back, enjoy the ride, and we'll see kind of how this one plays out. Let me know what your thoughts are down in the comments below. Do you think there's going to be a new lower low? And if you do, how low do you think Bitcoin is likely to go? If you found this useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And don't forget, guys, join us down in Discord. I don't think you'll regret it. Until the next one, have a fantastic day.